Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Markets are bleeding red with Bitcoin falling to $87,000 and liquidations topping $580 million. But institutional money is quietly buying the dip. Bitcoin dropped below $86,000 overnight, triggering cascading liquidations across nearly 200,000 traders. Bitcoin sits at $87,247, down 4% from yesterday. Ethereum fell to $2,959, while XRP slipped to $1.92. 75 of the top 100 cryptocurrencies now trade below both their 50-day and 200-day moving averages, a rare signal of weakness that typically precedes more downside. Three factors are driving this sell-off. First, Chinese authorities shut down approximately 400,000 miners in Xinjiang, dropping the global Bitcoin hash rate by 8%. Miners are now forced to sell holdings to cover operational costs. Second, Bitcoin ETFs saw their largest outflows since November 20th, with $357.6 million exiting on Monday alone. Fidelity led with $230 million in redemptions. Third, the upcoming Bank of Japan rate decision has markets pricing in a 90% probability of a 25 basis point hike. Previous BOJ rate hikes triggered Bitcoin declines of 20 to 30% as the yen carry trade unwinds. Bitcoin could test $68,000, though Japan's 17 trillion yen stimulus package may limit aggressive tightening. Despite the sell-off, smart money is accumulating. Cathie Wood's ARK Invest deployed roughly $60 million into crypto stocks, buying Coinbase, Circle, Bitmine, Bullish, and CoreWeave. Strategy added another 10,645 Bitcoin worth $980 million, bringing their total to 671,000 Bitcoin. On-chain data reveals long-term holders have distributed 755,000 Bitcoin since July, while short-term holders absorbed 1.8 million Bitcoin. That transfer from weak hands to strong hands is classic late-cycle accumulation. Regulatory momentum is accelerating. The Office of the Comptroller of the Currency granted national banking charters to Circle, Ripple, Paxos, BitGo, and Fidelity Digital Assets, formally integrating crypto firms into the US banking system. The SEC issued a no-action letter allowing tokenized stock offerings, clearing the path for 24/7 stock trading on blockchain rails. JP Morgan just launched its first tokenized money market fund called MONI on Ethereum, seeded with $100 million, targeting institutional clients. Ripple is expanding its RLUSD stablecoin to Ethereum Layer 2 networks, including Optimism, Base, Inc., and Unichain. The stablecoin now holds $1.3 billion in value. Meanwhile, XRP spot ETFs logged 30 consecutive days of inflows approaching $1 billion, yet the token still fell 6% as profit-taking overwhelmed new demand. Liquidity is thinning as year-end approaches. Stablecoin issuance dropped by 2/3. Without fresh capital entering the market, Bitcoin is likely to trade between $81,000 and $102,000. Prediction markets now assign only a 23% probability that Bitcoin finishes the year above 100,000. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.